In this video, traders, I want to talk about overtrading, specifically if you're day trading the European or US indices. Stay tuned. Hey guys, one for you day traders out there who are specializing in DAX, Dow, FTSE, NQ, NASDAQ, ES, the S&P 500, any of those, and you're a day trader. This is going to be quick, but it's going to be useful. Now, I must have lost hundreds of thousands of pounds trying to learn this lesson before I finally twigged, and we had a discussion about overtrading and specifically day trading, because it's so, we're sitting in front of the screen, we want to trade, we want to be involved, we want to be engaged, we want to take trades because we know that taking trades equals money in our account. We forget the fact that we end up digging ourselves a hole. We talk specifically about when to trade. And one of some great contributors, guys, some great traders in the team mentioned, hey, listen, it's about waiting. If you can just wait for that sweet spot, that great trade or the great couple of trades, that's the way to do it. And one of the tactics that I kind of do when I'm day trading the US markets is to split the day into segments. And this is something that pit traders used to do quite a lot of. And it's something that you can just see works well. So this x-axis is UK time. So the US market opens at 2:30 UK time, closes at 9 o'clock UK time. The equity market regular trading hours. I know, of course, if you're trading a CFD or a spread bet or one of the indices, you're going to have access to that all throughout the evening. But if you're just trading it during those regular trading hours, that's when stocks are open. That's when the options are open. That's when money's flowing back and forth, back and forth. So what I like to do is I like to go, okay, for the first hour and a half to 2 hours, normally till about 4:30, that's chunked as one period of time, because that's the UK close, 4:30 UK time. So 2 hours, 2:30 to 4:30 is a good chunk of time. And then we have a little window of time where we get to kind of a noon push, because very often the market will push into noon. Maybe it'll push into about a little bit later, but between kind of 5:30 and 6:30, I will think, okay, now we're going into chop. So if we put this here, imagine this one here, well, let's just set the put on a dotted line as well, just to show you. So from this period to this period, like from 2 till about 7:30, I'll consider that as lunchtime chop. Now, in this example on here, it's a little bit of activity. If you go to these kind of time periods, look how slowly and grinding it is. Look how slow and grinding it is today. So that's a separate area. That's what I call a lunchtime chop. Okay, now I will allow myself to trade if I'm exiting a trade, because very often we talked about the noon pushing, kind of pushing to highs around the noon time, around 6 o'clock time, UK time, that type of thing. So I'll exit a trade, but I won't be initiating a trade. I definitely won't be looking to scalp or anything. So we've got the first couple of hours till 4:30, which is this period here, and then it kind of goes into a different mode. And so you kind of go, right, this is the morning session, and the morning session from 2:30, no, it's US time, 2:30 till 6:30, or around 6 o'clock, has two different phases to it. So not overcomplicating stuff too much, guys, but it has a couple of different phases for it. Pre-European close, post-European close. Then we have the lunchtime chop. Then we go into the kind of afternoon, evening, or it's afternoon for the US, evening for me. And this is the period, let's put that as an actual solid line, because this is going to be where we're looking to trade. This is when we get the kind of final move, if you like. Sometimes we get a continuation of a trend like we've got here. Sometimes you get a reversal. Very often you're going to close at the volume weighted average price, and not much happening. But this time period here is where you're kind of permitted again to take some trades and to do some scalps. So this is different for everybody, don't forget. So this is our open, and we've got the pre-European close, which is very, very active, the most active time. And I think that if you're a part-time trader, that's the time you should focus on. That 2:30 till 4:30 sweet spot, a lot of activity going on there. Then 4:30 till kind of 6:30 peters off a bit, but often we get those extensions, which is good if you've got a trade idea and you're holding to kind of find the close. Then no-go zone for initiating new trades specifically. Guys, I know there's exceptions to the rules. Sometimes there's very busy days. Sometimes there's stuff going on, of course. But generally speaking, we're trying to avoid overtrading. So let's keep out when the times when there's not much volume. Let's keep away when things aren't being so active and stuff going on. And that's generally the case. And then we'll come back into the market at 7:30 till 9 o'clock. Got an hour and a half then, where very often you get an extension of trend if it's a trend type day. get a reversal, back to the VWAP. Very quickly though, you're probably going to know the day type. You know, very quickly you're going to go, you know what, it's grinding around, it's not doing much, it's just chugging, I'm not that interested. Maybe if you're positioned long from early in the day, you might unwind some of the trade into the close, but you're probably not going to initiate a new trade. So from a day trader's perspective, volatility right at the beginning, middle of the day tends to back off, accelerate sometimes into the close, not always. So to avoid over trading, depending on the market you're trading, chunk your day into different elements and go, right, that's my real sweet spot, that's my second favorite, that's my no-go, that's my third favorite, or whatever it may be. And then you can go further and go, what type of trade am I looking to take in that? So maybe you're only allowing yourself to trade in this kind of sweet spot here. So you go, right, this is my, yes, this is ticked my green box, I'm allowed to trade in here only. So you've restricted yourself, and then you go, right, well, I'm only looking to trade mean reversion type trades. I'm only looking to trade trend extensions. I'm only looking to trade during this day type, extended opening drive type trade. Then you're minimizing your number of trades that you take even more. And that's what we're trying to do, guys. I want to find an excuse not to trade, not to trade. In other words, I want to basically say to myself, my default setting is not to trade, and I need to be very, very, very mindful. I'm going to trade. I might have said that wrong around then, but you get the idea. The point is default setting, no trade. And I want everything to line up perfectly. Conditions, day type, time of day, where we are in the bigger trend. What am I looking for? What is the type of day I'm looking for? What type of trade idea I'm looking for? They need to line up, and then I might be super active and go, yes, I wanted to buy this dip. We come down from a kind of trend day thing. I expected a flush in the morning. I'm looking for buy the low. Wait for it. Okay, 10 minutes in, we get the low. Do I get it? Yes, bang, looking to whatever the case may be. Okay, you've got your theme, you've got your idea, but it's lining things up and making sure that your default setting is not to be trading. Your default setting is to be not trading, and only under the conditions that you choose as a trader that are perfect for your edge and where you excel is when you risk your hard-earned capital. Wasting money trading during time periods where it's chopping around, where you haven't got an edge, or if it's a grinding trend. One of the guys in the back hates grinding trends. I hate grinding trends too, unless you're already positioned, because they just mess with your head and you're getting caught out. Whatever the case may be, whatever your nemesis is, just avoid it. Drag those boundaries in and focus on just a very, very, very one thing that you're good at, or you think you're good at, you think you've got the edge, and do that way, because you'll find your returns are way, way better than if you're trying to trade every little ebb and flow and back and forth and stuff during the trading day. Whatever you're doing, guys, take care, keep this managed. I'll see you in the next one. Bye bye.